Hello, my name is Alan Panter. I'm a principal at Yeo and Yeo CPAs based in the Auburn Hills office. I am a certified public accountant and a certified government financial manager. I have been providing services, mainly audits, to governmental units such as libraries for over 30 years. This is the second of two short webinars that are intended to give you some basic guidance on how to adopt your library's annual budget. The first step in adopting a library's budget is to review or update the strategic plan that your library hopefully has in place and has been updated fairly recently. That strategic plan should be revisited and updated as time goes on and is really the starting point for what the budget is going to look like. Really, the strategic plan should be a living document that is constantly being updated as time goes on and not just before the budget season. Having that broad strategic vision in place helps to communicate what is important to the board and the various library stakeholders and is really the starting point for the budget to start to take place. Next, we need to determine what the goals and objectives are for the year within the strategic plan. What are the things that we want to accomplish this year, and how are we going to go about doing that? Having clearly defined goals and objectives, preferably in writing, is an important beginning to the budget process. Next, we need to look at how much revenue we need in order to accomplish these goals and objectives. Since most libraries are primarily funded by property tax dollars, the annual millage rate request form, the L4029, needs to be submitted to the County Equalization Department either by the library or the parent government if there is one. And that is the starting point for the estimation of the revenues for the year. Next, we need to look at the salary and benefits schedule, since the biggest thing most libraries spend their money on is their people. Start with prior year salaries and add any raises that are planned. Make sure to indicate if any positions are vacant or new, or if any are going to be eliminated or combined. Be sure to include benefits and payroll taxes as part of the schedule. For most libraries, I would think that the position schedule is a spreadsheet, and everyone on it is broken down by department and their salary, payroll taxes, and benefits for the year. So now we have the largest revenue estimated and the largest routine expenditures estimated. The next step is to update the long-term capital budget. We recommend that every library create and maintain a long-term capital budget. The capital budget is sort of a wish list for capital items that the library can add to or subtract from as projects are identified or completed. The capital budget would be in the form of a spreadsheet that lists each individual project in a row on the spreadsheet and indicates the priority of each item, what the funding source is, and an annual estimate of costs, since many of these projects are repetitive or will take years to complete. The spreadsheet will have totals at the bottom by year that will really help you to understand the long-term capital needs of the library and to provide a tool that can be used to communicate what projects are ongoing at the library or coming up and how they're going to be funded. Once these first steps are taken care of, we can start to look at what the actual budgetary timeline might look like. This is going to vary widely from library to library, so this is only a general example. Of course, the strategic planning, goals and objectives, property taxes, position schedule, and capital budget should be done, or at least in progress, before this process starts. What I'm really trying to get across here is how far in advance of the fiscal year end that this needs to start, just because of the number of people that have input to this process and the approvals that are necessary. 6 months or so before each year end, department heads would submit a request for changes or updates that are based on, in part, on the prior year budget and taking into account the strategic plan, goals, objectives, etc. that we talked about before. After the department requests are received, they would be compiled into an initial budget for review by the finance department or the library director. Once that is approved, it can be presented to the board for review. The board will ask review the budget, ask questions, request changes, and then the Finance Department will need to make more changes. After these changes are made, the public hearing can be held. If there are changes from the public hearing, those can be added in and included in the final adopted budget. The final budget should be adopted by a resolution of the board and included in the board minutes. It must be adopted before the year actually starts. If not, the auditors are supposed to report on that. One of the requirements of Public Act 621, which was discussed in the Budgetary Basics webinar, is that a budget document be prepared. The budget document would then be approved by the library board and included in the minutes. The Public Act has some requirements of what needs to be in the document, but those are pretty general, and I think what this looks like is going to vary from library to library. There's a sample budget document included in the Financial Management Guide as Appendix 4.1. The budget document should identify revenues by source, and expenditures would be at the level of control, which we'll talk about on the next slide. The column format of the budget document would show prior year actuals, prior year amended budget, and this year's proposed budget amount. You can also have columns for variances and future year projections if you want, but that's not required. The full set of requirements for the budget document are listed in Chapter 6 of the Financial Management Guide. The budget revenue and expenditure lines should be totaled and added or subtracted from the prior year's fund balance to come up with a projected ending fund balance. We recommend using the fund balance from the prior year audited financial statements for this. The projected ending fund balance can also be broken down into the various components of fund balance, which are non-spendable, restricted, committed, assigned, and unassigned. This helps to communicate the different purposes that the existing fund balance has been earmarked for. The level of budgetary control, and we're only talking about expenditures here, is basically the point at which the next dollar of spending is legally over budget. Your budget resolution document needs to be at this level and is also the level that should be shown in your financial statement's budgetary comparison schedule. There are three common levels of budgetary control: line item, activity, or department, and fund level. The line item level is just what it sounds like, a budget for every line in the general ledger. I don't recommend using a line item budget, though having that level of breakdown for internal reporting is not a bad idea. I would just not adopt the official budget at that level except for the smallest of libraries. The activity and department level is the most common budget level that I see in libraries' general funds. The last level is the fund level. This is fine for smaller funds of the library, such as an endowment fund or a capital project. We typically don't see that in the general fund, though, although I'm sure there are exceptions. Different funds can, and often do, have different levels of budgetary control, like the general fund being on the activity or department level and other funds being at the fund level. This is perfectly fine and something that each library should decide for themselves what works best.